Hello, everybody, and welcome to the Enterprise Suite accounting demo. Okay, we're going to log in as obviously Admin UK to the demo corporation data set, and we're going to use the local area network as our connection. Okay, let's sign in. Okay, and click on the accounting module. Okay, the layout of the module is exactly the same as the other modules. If you've watched any of the presentations, you'll know that we've got new, so we've got new nominal code, new journal, new prepayment, and we've got find, and in our tool sections, we've got other things we want to do. Okay, right. We've also got a workflow menu here, and we've also got dashboards. Okay, so let's just, I suppose, start from the top and work our way down. Okay, so let's do a new nominal code. When you first set the system up, you can pick a template, a predefined template. Obviously, if you don't want to use that, you can set up your own. But our recommendation is that you kind of go with the default one and then edit it or change it. Okay, so the options are: would you like to create, set up your chart of accounts, user defined, or from a predefined template? Okay, well, we'll add our own. Okay, do you want to do a simple structure or do you want to do a segmented structure? Okay, so what this means is, from a segment point of view, do you want to kind of have split it by, let's say, country, location, and department? Okay, but we'll just do a simple one for the time being. And so what it's asking me for is a nominal account code and description. Okay, so I'm going to type 40,000 in. I'm going to call this sales, I don't know, type Z. And what it's saying here is it an asset, liability, equity, revenue, or expense? Well, it's a revenue account. I can also pick subgroup analysis. So I can say, yeah, it's a sale. These are also user definable as well, and they're purely for kind of reporting and analyzing. And then within the sales, what do I want to stick it into? Well, I'm going to stick it into sales other income. And I have to identify if it's a bank account or a petty cash account. Okay, so I say next. Um, This is obviously meant for if we're kind of doing a lot of accounts in one go. Yeah, but essentially I've just done one, and I can assign a budget to this particular nominal code if I want to. Okay, so I say next, and that's generated that nominal code. But I could obviously do as many nominal codes at once if I wanted to. All right, so let's just go into this again. Okay, and let's do this. We're going to copy from our normal template. Okay, and we're going to do a segmented structure as well. And we're only going to apply the segments to profit and loss codes. Okay, revenue and expense codes. Okay, so we'll go next. What it's coming up with now is the segments. I can actually define the segments before I get to here in my account segments area. Okay, but we'll do it while we're actually doing this. Okay, so I've done country, location, department. Okay, I can have up to 5 segments of 5 characters each. Okay, I can move them up and down using these buttons. I can get rid of them, and I can change the descriptions on them. Okay, so I say next. So what it's asking for on countries is which countries would you like? Okay, so you obviously put those in. What locations do you want, and what departments do you want? Okay, so on the location side, let's add London to it as well. Okay, so if I go next, what it's saying is for countries, it's saying in Australia, okay, what countries? Okay, so in Australia we have Sydney, in the UK we have Manchester and London, and in the US we just got Los Angeles. Okay, so it's just that when it's generating the codes, yeah, if we didn't do something like this, it would create a segment code for Australia and Los Angeles and Manchester. So, but by identifying this now, what we're able to do is basically cut down the list straight away. Okay, so location, LA. What departments do we have in LA? Okay, well, we have, let's say, admin and accounting. In London, we have purchasing and support. In Manchester, we have admin and purchasing. And in Sydney, let's say we've got accounting. Okay. Okay, so what you can see now is from the template, yeah, it's created, okay, the code, the segment, and the description. Okay, so it's put in there sales promotions, Australia, Sydney, accounting, and it's done that for each department. So you can see that this would actually create a massive nominal code. Yeah, so we're not going to save this, but essentially, you can see that, for example, contents and public liability insurance, you've got it for Australia, the UK, the US, and it's picked all the actual options we've got. Okay, so I'm going to cancel. Okay, right. So let's do a journal. very basic, simple journal. The date, okay, so let's say the date is January. We have something called templates in here. So if we kind of have to do a journal a lot, um, then for let's say I don't know a budget, a split on the wages or whatever it might be, we can call up that journal and it'll actually default all the actual codes in. Um, so let's just kind of open a template up so you can actually see and create a percentage split one. Okay, create a new journal template. We'll make it a percentage one, and I'm going to call this example percentage. Okay, the account codes I'm going to pick is a list of my nominal codes. Obviously, I'm just picking a few, and I'm going to say, right, 100% of the value will be there, and 50% will be there, and 50% will be there. And obviously, I can put some details in, and obviously tax types. So that's saved. That particular journal template saved. Okay, so when I actually open my journal, I could actually pick that particular one that I created. So if I pick it, what happens is it defaults in those nominal codes. And if I type 1,000 in here, it will automatically put the other amounts into there. It's just a very quick and easy way of splitting out costs but between department or whatever. Okay. Another way, okay, if you actually save this journal, you can actually automatically save, change date, and make a reversal. If you wanted to kind of do a journal this month and then reverse it next month. Because of the period we're in at the moment, it's automatically put January in, okay? But if I kind of backdate this to, let's say, November, then it'll put November period, because obviously November's open. If I put an October period on, it still puts November, okay? Because September and October are closed. November is the only open period we have. So anything dated before that's entered onto closed periods, it would stamp with a November period transaction code. Okay, so let's just put this back to January the 4th. January the 12th. You can see it puts it as January. Okay, so save and close. That's a journal. For those people that like to do manual journals. Okay, the reason that people do a lot of journals is to do prepayments and accruals. Okay, but what we've done is we've tried to simplify this for people. We've created like a prepayment wizard. Okay, so if I open the prepayment wizard and say next, so for example, let's say I've paid the rent for the year, £12,000, and that £12,000 invoice has gone directly onto our profit and loss, and there's 12,000. So in this month, there's £12,000 sitting there. Okay, so what I really want to do is take that £12,000 off there and just drop £1,000 a month onto the profit and loss. Okay, so if I put £12,000 as the rent, okay, over 12 months, and basically put a reference 1 in and a reference 2 in, and here I need to pick rent. Okay, so I know it's 7 something. So if I could just kind of, it's not rent income, it's actual rent. There you go. Okay, so that's the nominal code. That's the prepayment nominal code in the balance sheet, and that's the actual rent profit and loss code. So what it's going to do is it's going to split that £12,000 into each period, each month, and then it's going to do a journal to take £12,000 off the rent profit and loss code and stick it into prepayments on the balance sheet, and then it's going to drop £1,000 per month onto the profit and loss for me. And that's it, done. So that kind of simplifies the journals that need to be done for a prepayment. And obviously accruals are exactly the same way. For example, you've got the telephone bill in, or so you're accruing for the telephone bill coming in 3 months' time, and it automatically reverses itself. Okay. We also have bad debt provision. Okay, contras are grayed out essentially because in standard it's not a feature. It's in the advanced version. Contra adjustments are actually a feature, so you can contra between customer and supplier accounts together. Okay, but bad debt provision is exactly the same as write-off. Okay, but bad debt provision, all it does is post a provisional journal to say we're budgeting for this amount of bad debt. So you've got provision date, which is today. You can do it based on amount, base it on how overdue it is, a specific customer or all customers. When I go next, it'll pick out all the transactions outstanding. And I can say, well, that one, that one, that one, that one, and that one I expect to be bad debts. And I'm not actually writing them off. Nothing's changed on the customer account. All I'm doing is I'm just provisioning for them to be bad debts. And what it'll propose is, right, there's a summary of what's going to happen. And there's the journal it's going to do. That's it. Okay, I'm not going to bother viewing the journal. Okay, now at some future point, yeah, let's say before the next month end, I'm actually going to have to go into this provision and reverse it. Okay, so um, so all it does is just make a reversal of the actual journal that's been done for the provision for bad debt, and then I can go and do another bad debt provision. Write-off is exactly the same. Okay, and this can be used to tidy up the ledger. Like, so let's say you've got lots of pennies outstanding on customer accounts. Rather than do a statement run which costs you up to 10p a go, you might want to kind of clear all those off. So this is for writing off small amounts and actually writing off proper bad debts as well. Okay, so you've got the same sort of criteria that you had before. How overdue it is or whatever. But this will actually create, okay, write-off transactions. Okay, and it will post write-off transactions to those customer accounts. Okay, so if I look at the actual write-off itself, it'll give me the details. So a French customer has, so Global Electronics, let's say, the amount we wrote off was 11715. If I go and look at their account, you can see that there'll be a transaction on there called IWOF 002 in their ledger. Oh. Okay, so you can see that there's the transaction, and that's been entered for the bad debt write-off. You can see it's for £117.50. Okay. Okay, so that's new. Find is obviously finding the prepayments that I've done, finding the write-offs I've done, finding the bad debt provisions, the open ones or the history. Now we're into tools. Okay, so within tools, um, we have EC sales list, intrastat reconciliation, and VAT return. So let's look at the EC sales list as an example. Now, a problem with a lot of systems was that whenever you took a VAT return or an intrastat or whatever it was, if you lost your hard copy or lost the information at the point that you reconciled it, it was always a bit difficult to kind of reconstruct that data exactly as it was when you actually did it. So yeah, you can get day books and things like that, but essentially what we decided to do was if you did an EC sales list or an intrastat or a VAT return and said, right, I want to reconcile it, we took a snapshot and saved it. Okay, so that meant that you could always go back to it, recreate any CSV file or recreate the actual reports exactly as it was when you did the return. Okay, so we're on EC sales list now, and you have to do an EC sales list if you turn over a certain amount with you sell to Europe by a particular amount. Okay, so we're going to do this by date range. Okay, and I'm going to do it from the 1st November. So I'm going to say produce the EC sales list. Okay, so I've got one customer. Okay, that is obviously I deal with in the EC. Okay, and these are all the transactions that I've done with them, and they add up to that. So when I actually create the file, okay, it'll produce the file in exactly the right format that you can actually upload to the customs website, and you can see that it's the well, not bore you with it, but essentially it puts it in the format that you actually have to upload the file to. Okay. And obviously if you reconcile it, that'll save that as a snapshot there and then. Okay. But you can also print it as well. So up to July last year, you could actually print this document. Okay, but they changed it so you have to actually have to upload it as a CSV file. So it's up to you. You can still print it if you want to for your records. Okay. So that's EC sales list. Okay. Now the intrastat, okay, works on the same basis. Okay, but this is in the customer ledger and the supplier ledger, which I've already done the presentation for. You actually confirm the sales and the purchases of transactions that you've done with Europe. Okay, and only then will they actually come into this screen. They've actually got to be confirmed. So you've got to confirm the commodity code and the weight and all that sort of stuff. Okay, so let me do this by date range and do this, let's say, for a couple of months to get some data in there. So arrivals are goods in. Okay, so if I produce the intrastat, hopefully I've got some transactions. No transactions. Let's try dispatch. Have we got any sales? No. Okay, let's go back a bit. Arrivals. Okay, cool. We have one. Okay, so um, so you would obviously put your dates in, yeah, monthly usually or quarterly, it's up to you. We've got a thing here that says include unreconciled transactions. So obviously we wouldn't usually include reconcile transactions because they've already been kind of reported to customs. Okay, so we've got two. We've got a credit note and we've got a GRN because obviously all our um, intrastat analysis is done on goods received, notes, and sales invoices out, okay, on the dispatch side. Okay, so if I click on this one here and go to Detail tab, it actually gives me the detail behind that GRN. Okay, so I can see the day, I can see um, uh, the way it was brought in. So here you can see there's the item, there's the description, there's the commodity code, which obviously there should be one. And obviously, when you set this item up, you should put one against it. The the way it was brought in, the terms of delivery, is supplemental units required, and obviously the weight. Yeah. So it's what the system's automatically put in. You decide whether it's net weight or gross weight when you set up the item, and it'll automatically calculate out by the quantity. It's giving you all the other information like what purchase order was it linked to? Is it fully shipped? Okay, so when you actually create the file now, okay, based on this, it will put it in exactly the right format for customs. Okay, so you can see, these obviously columns and fields actually mean something kind of from a customs point of view. Okay, and when you reconcile, so I'm going to reconcile, successfully reconciled, it means that I have saved this. Okay, and it's saved, so I can come back to this intrastat whenever I want to, open it up, and I can recreate the file if I needed to, because let's say I lost the file, and it's there for me to look at and say, well, Mr. Customs, this is why I created that file. That's why I sent it, because I've got a credit note and a GRN here, and that's what makes up the figures. Same on the VAT return. Okay, so if I do a new VAT return, I'm going to do it by date range, and I'm going to do it by date range to make sure I actually get some transactions in here. Do not include reconciled transactions. Produce the VAT return. And essentially what you can see is the normal familiar 9 boxes. You can drill down on a particular box to say what makes up that figure, the £545. We can see that it comes from standard rate and EC sales. Okay. So if I kind of highlight standard rate, you can see all the individual transactions behind it. If I look at the other box here, one of the things it copes with is the notional rate. So obviously, if you buy things from abroad that were supposed to be standard rated, what you're supposed to do is on your VAT return show the amount that you would have paid in tax if it had normally been charged. So you can see that I've got £3,000 worth of turnover here for EC purchases standard rate, and the actual tax amount is 0. Okay, but the notional rate works out that it's £533.75. So you add that to give you the figure that you've actually got in that box, the 742.94. Okay, we haven't hard coded any of these boxes. Okay, and what that means is you can actually decide which tax codes that you make up go into each box. Now, the great thing about that, a lot of systems hard code their VAT return, okay? But the disadvantage to that is that if you ever get some legislation change, like we've just had the reverse charge legislation come out, which means that for people that kind of import or sell mobile phones and electrical equipment, yeah, they have got to they're not going to pay the tax anymore, yeah, but they've got to account for it, and then when they sell it, if it's to someone that might sell it on, they've actually got to account for the tax as well. So it's a bit like the kind of notional rate. But what that means is, with a totally flexible VAT return and totally flexible tax codes, it means that we can cope with that additional legislation issue out the box. It's just create another tax code and decide that we're going to have a notional rate on it to put it into the sales and purchase tax boxes. So I believe a lot of systems are going to have to be rewritten, yeah, or kind of elements of them are going to have to be rewritten to cope with that. But we set off writing this to make sure that if anything came along like that, we could cope with it very quickly and easily. Okay, so if I reconcile this VAT return, okay, and say okay, obviously these little pop-up boxes tell me if I've done something correct or not. And so if I just kind of click on the VAT return again, you can see that I've got that particular VAT return. It's there forever now. Okay, whenever I want to load that VAT return up, I can see that's what makes those figures up. I can reprint the report again if I want to. Obviously, this is a daybook summary. I've also got a kind of box summary, and I've also got the actual VAT return itself. So I can, I've not lost it. It's there. I can come back to it. Um, Also, our journals, yeah, allow you, okay, to enter tax type and tax code. Okay, so what that means is when you've got adjustments like, I don't know, VAT scale charges or whatever it might be, yeah, you can actually enter that as a journal and it will appear in your tax return. Okay, so a lot of systems don't seem to let you do that either. Okay. Right, what else have we got? We've got retrospective analysis. So if you wanted to see a kind of debtors and creditor list as of a particular time going backwards, we've obviously seen we've just seen journal templates. Okay, so multi-currency revaluation. Okay, a lot of systems do not cope with multi-currency very well at all. Okay, or they either become very complicated, yeah, so no one really kind of can get to the nitty-gritty anymore. All right, we only take losses or gains, okay, when transactions are allocated against each other. So in the customer ledger, let's say you had $100 outstanding and that was worth £50 in base currency, and we've got a receipt on there for $100, and that the exchange rate that was put on, that's worth £75. So there's a £25 loss or gain there. Okay, so only at the point, if we put those two on and didn't allocate them together, we wouldn't, it'll be fine. But basically, if when we allocate them together, that's when we actually take a loss or gain. Okay. Now, what that means is though that we do have obviously currency exchange rates going up and down. Okay, and you might want to get a handle on all your outstanding customer transactions, supplier transactions, and your bank accounts in foreign currency. What is their value with these exchange rates? Okay, so that's what this routine is all about. Okay, so if I say get transactions, what you'll see is that here's an invoice, okay, for €150. So all the kind of dollar and euro and foreign currency customer accounts with anything outstanding, whether it be receipts, credit notes, or whatever, yeah, it will all be here. Okay, so that was €150. The original exchange rate was 3, so the original base value of that transaction was 50. Okay, the current exchange rate is 1.5, so the new base value would be 100. Okay, so there's a £50 loss or gain. Okay, now it doesn't change anything to do with that transaction. That transaction will always stay with €150 at an exchange rate of 3. Okay, and it will always be worth £50. Okay, we're not writing back journals to the ledgers or anything like that. Okay, this is basically the reason for that is that this routine can be run any minute of the day. I can run it right now, and I can run it in 5 minutes time. Yeah, and I can still post the provisional journals because it's up to date all the time. Okay, so then here's a list of your suppliers. So if we just look at customer, the total loss or gain on all our foreign currency customer accounts is 141. Same with suppliers. Okay, same with our bank accounts, and this is the proposed journal. So what it's proposing is that we post that to our unrealized loss or gain account, that on the supplier side, these for the bank accounts, and so we have a unrealized currency loss or gain on the profit and loss, and we have accrued foreign currency loss or gain on the balance sheet. Okay, and what it does is it looks at that nominal code and says what's the value of it, and it does a reversing journal, okay, of that amount, and then enters this new revaluation. The reason for that is so this can be run by an end user every minute of the day, and they can prove their foreign currency revaluation every minute of the day. So if I just kind of revalue, yeah, it produces me a report, but essentially that now saves that, and it's posted that journal. Okay, so if I come out of there, okay, and click on here again, it's saved that exactly as it was, but I'm going to say new, and I'm going to just go and set exchange rates. You can set exchange rates in the system manager, but we'll just put the button on here to make it kind of easy. So I know I've got some euro customers, so I'm going to put 1.7 in there. So I know we've definitely got a difference. While we're here, it also logs, it tracks who changed what when. Okay, so let's come out there. So now I'm going to so now you can see it's automatically refreshed the list anyway. So now we can see that €150 that was worth £50 is now worth £88.24 at the new 1.7 rate. So you can see that we've actually got a loss here. So when we look at the journals, okay, now it's going to zero. We've already posted £146.23 against the accrued foreign currency loss or gain account and then realised loss or gain account on the profit and loss. So it's just going to zero that. So the 146 zero it. And then it's going to enter this new journal, okay, and provisional for that, and we're going to provisionally provision for that £534.95 loss. And that's it. Really simple, really easy. Anybody can come in here any minute of the day and do a proper accrual for their loss or gains on foreign currency. I don't know any system that's as easy as that on foreign currency. Okay, stock revaluation. Okay, now what we did here, okay, FIFO and cost of goods. Obviously, costing methods are average, FIFO, LIFO, standard. Okay, and first in, first out. Okay, doesn't really work that well on most systems. Okay, and the reason is this: is that if you get goods in that have not had a purchase invoice against them yet, okay, you don't know the confirmed cost, and if you sell them before you know the confirmed cost, well, FIFO doesn't work, does it? Because first in, first out, you're supposed to be doing a cost of goods sold, yeah, at the price, at the actual price. Now, there's some systems are very weird. They kind of hold the real cost of goods sold and until you get the bill in, the purchase invoice in, that's when it posts it. But then obviously you have a sale sitting on your profit and loss, but no purchase, no cost of goods sold. Rubbish. Okay, so basically, other systems, they kind of post a wobbly average, yeah. But what we've done is we've said, right, all our cost of goods sold are going to be an average, and an average that's calculated properly based on just bills. Okay, it'll never go negative. It never does what all these other systems seem to do. Okay, so it's a properly calculated average. Okay, and essentially this routine here, this stock valuation routine, is to prove our stock value, okay, where average costed items are costed by going quantity left in stock times the average cost. Okay, if it was a standard costed item, it would go quantity left in stock times the standard cost. Okay, if it was a FIFO item, okay, it would actually be costed based on the quantities left in stock of the GRNs or adjustments in or credits back, yeah, for a particular item. So we can see here that the unconfirmed cost, let's say here, of this GRN was 15. Okay, now if there was no confirmed cost, like let's say the purchase invoice in for it, okay, it would go 20 times 15 is £300. Okay, so that is the actual value of that item. Okay, if we have a purchase invoice in though for that quantity left in stock, then it would use that. Okay, so you can see here that it's actually using the other there, but the value then is £1,132.70 rather than the 1140. Okay, so what it means is on FIFO costing method items, okay, we would use this individual makeup. Okay, the actual quantities that we've got left in stock on the GRNs adjustments in that we actually have in stock. Okay, and then what happens is it adds all these up and it comes to a total. The total is then put there. Then it looks at the inventory control account, okay, on the nominal, and it says what's the real value of that, because when you do a cost of goods sold posting at average or whatever, it obviously reduces our inventory control down, yeah, and puts it into the profit and loss as cost of goods sold. But that's the average. So what we're doing is we're doing a FIFO tidy up here. Okay, so what we're saying is the actual value of our inventory control account should be £75,000. It's 236 pounds. Yeah, so it's proposing a journal to put it right. Okay, and that journal would be to increase the inventory control account by that amount and take away cost of goods sold from that amount. And that's it. So very, very simply and easily, we've proved our stock valuation, okay, and we've put our cost of goods sold exactly right for FIFO, average, LIFO, and standard cost. Okay, well, while we're on the subject of standard cost, obviously it does that properly. The standard cost um, basically, um, if you it puts them into stock at standard cost. When the bill comes in, it obviously posts the price difference, all that sort of stuff. Okay, so I'm going to reevaluate. And what it does is it saves that, it posts the journal, and obviously it creates a report. Okay, so when I look at the list of stock value valuations, and the accountant says to you, why did you post that journal to change your inventory control account and update your cost of goods sold? But you can say, well, that's why I posted the journal, because the value of my stock was this. Okay, these are two very important points. Yeah, we really went back to plain paper on these. Um, you know, having used an awful lot of systems, I've got an awful lot of experience of other systems. These were two areas that, well, were never right, essentially. Well, in my opinion, never right. But a lot of our support calls were about this as well. About foreign currency not balancing or not being right, or my stock not being right. Well, here we have it. From a support point of view, you direct them to these routines, and from a kind of customer point of view, you prove your figures any minute of the day you want. Okay, before I go into kind of chart of account, what I want to do is show you the financial layout setup. Okay, so you can have as many financial layouts as you like. Okay, and one of the things I want to get across is that some systems on the nominal codes have like categories. Okay, and essentially that means that you could only really ever have one stationary layout. What we did was we said, right, if we've got Sales UK as a heading, okay, you can basically have whatever codes, whatever nominal codes you want to appear in that list, in that category. So you can just add them by clicking on there, clicking on another one, say okay. That's it. You've added it. Um, now, when you set up your layout, you decide whether it's an account type, a summary, or just a text line, or it's a profit and loss summary. Okay, so obviously this is a account type. I've got here something called indents. Okay, so you can indent something or not indent it. Now, if you indent it, it will automatically put a subtotal. Um, when I show you the actual chart of accounts, this will become clearer. Okay, now what we're also saying here is it usually a debit or a credit? Okay, so sales are usually credit balances. Okay, so if I want them to appear as a positive on my profit and loss, then I have to say they're usually going to be a credit balance, because if I don't, then obviously it will display it with a negative. Okay, my little thumbs up button here, what it actually does is it tests. Okay, it tests my layout for me, and it says you've duplicated some accounts. And obviously I just added that 4,200. So obviously it's telling me that I've obviously got that's a duplicate. But the really nice thing about it is it tells me where it's duplicated as well. So I'm not having to kind of go through and find it. It's which one am I going to take it out of? And also it reports to me accounts that are not reported. Remember we set up that 400,000, that 40,000 account, so it's telling me that that isn't in the layout. So obviously my profit and loss won't balance with my balance sheet. Okay. Okay, so let's just come out of there and look at the chart of account. Okay, so this is for interrogating your profit and loss, your trial balance or whatever. Okay, so the first view is trial balance, but you've obviously got all the layouts that you've actually made up, your profit and loss layouts and your balance sheet layouts will all be there as well. Okay, just stick to trial balance at the moment. You've also got a filter for this month and the budget this month and the last year this month. So obviously we're comparing this month with the same period last year. This month and the financial year to date, the year to date versus the budget year to date, the year to date versus the last year to date as of this point, and the period. Obviously, you can compare periods. So you can say period 1, 2, and 3 last year, compare it with the period 1, 2, and 3 this year. Okay, so let's look at an individual nominal code. Here we have the code, the description, this month budget, the variance. We've also got account groups, so you can see that so let's just expand this a little bit more. I can actually put grouping on here, so group by box, grab that sub box there, and so now I've kind of grouped it by subgroup. Current assets, liabilities, or whatever. Okay, I'll just put that back. Okay, so let's pick on 4,000, which I know is a sales nominal code, that one there. Okay, as you can see, the actual is 1171.24. The budget was that, the variance. Okay, so let's go to account detail. So I can see for sales, the brought forward balance, the current balance, debit, credit, and the real balance. I can see graphically actual budget and variance with the actual figures. I can see it for this year, the current year I'm on, the current fiscal year, or any other year. I can do fiscal year analysis comparisons. Okay, I can also set up my budgets here. Okay, so here's a budget, 12,000. Okay, but if I want to change that and say, well, let's make it 24,000. Obviously, I need to put a negative in because these are credits. Okay, so there it is, it's changed. By clicking that little button there, it'll allocate it across. We also have the option to use budget splits. Okay, so what you can do is you can set up table if you're seasonal, so you get most of your business in January, February, March, whatever, and then obviously a lot less in the rest of the months. What you can do is you can put percentages in those months, and when you actually pick that table, it will actually do the split. That will split that amount by the same percentage. So obviously that particular split table has got more in January, a bit more in February. You can see it split that amount over that kind of period. You can copy budgets from other codes, and you can also increment it as well. So if I say, right, minus 24,000, increase it by 10% per month, per period, you can see what it does. Okay, you've also got a transaction history. And this for the 4,000 code, it automatically defaults the current period. Okay, now what I want to show you is the journals. Okay, so here's an invoice. Okay, let me try and pick a smaller invoice there. Okay, invoice number 4 to J&S Computing or whatever. We've got everything on the journal line. We've got the invoice. We can drill down on the invoice. We can drill down on the customer. We've got full information on the actual detailed description. And we know it's for £77. It's output goods and the actual tax code used, because we're actually creating our tax return from the nominal codes. Okay, so if I click on this journal, it'll give me the full journal description that it was part of. Okay, so we've got a debtors control element. We've got an element for freight. We've got the VAT elements. Okay, we've got the sales elements, and we also have down here the confirmed cost of goods sold. Okay, but the thing I want to get across is that everything is on the journal. You don't have to kind of take the URN reference, then go looking in the nominal and take a report to do this. It's all here. So here's an item line. £82.50 has gone to sales type A. It was invoice number 4. JCF was the customer. That was the stock item. The quantity was 5. It was £16.50 each. Output goods, normal rate tax. You've got everything in the journal. There's the complete journal, proper information. So if I look at cost of goods sold, I can see the cost of goods sold was they were £15 each. That's why £75 was posted for that item. Okay. So let's go back to the chart of accounts and pick on profit and loss. The profit and loss for. And what you can see now is it's using that financial layout we've already set up. Okay, and it's producing summaries. So I've got total sales there. So if I drill down on sales, I can actually see that subcategory there. So I can see that there's a total of 1,519 or whatever, and I can then open that up and say, well, what makes up sales UK? And then it gives me the individual codes. Obviously, you can drill down on them. We'll just go to the account tab. But there's a lot of drill down, drill around. Everywhere you see a hyperlink, you can drill down on it, and this is just a very nice way of seeing your profit and loss. Okay. Okay, everyone has to process month end. Okay, so what we thought we'd do is we thought we would put it all in one place. So we created a process month end wizard. So if I go next, all it's doing is it's just reminding me of all the things I need to do. So it's saying, well, are there any recurring entries in the customer ledger that that have been set up but we've not done yet? So it's recurring orders, recurring purchase orders, recurring standing orders, direct debits, recurring journals. Okay, any unposted transactions? Do we need to do any prepayments? All it's doing is just reminding me of all the things that we've just looked at to do it in one place, and reports that I need to take. And I look at close period. It's saying to me that, okay, all these periods are closed. We're in November. Okay, there's December's open. If I try and close the period and there's unposted transactions waiting for November, it's going to say to me, do you want to post these transactions now? Because it's not going to let me close the period when it's got open transactions for November. Okay, so if I said yes, it will automatically launch the batch processing, the batch posting mode. Okay, so I'm just going to say no. Okay, so what I want to show you here is though, there's a very, very easy way to do your month end and remind you of all the things you need to do. Okay, so in setup, I also want to show you accounting periods, how easy they are. At some point, you may decide that you want to have extend your year or reduce your year. Okay, so this is a major problem to a lot of systems. Okay, because obviously you've got transactions in the system, and now you want to sort of say end your year in February. So how do I add some periods to this and all the transactions that are dated for January, February, and March? How do I what do I do with them? Okay, so here we are. If you right mouse click on here, okay, you could add a period. Okay, there's January, add another period. As easy as that. Okay, now what it's doing, okay, when I save, okay, is that it's changing all the transactions that are not posted, okay, being dated whatever. So let's say these are, well, it's already done these, but let's say it's reperiodized, okay, these transactions. This was dated January, so that would have had fiscal year 2 period 1 on it, okay, but now it's got fiscal year 1 period 13 because we've just changed those. Okay, so by adding these two periods, it went through all the unposted journals and reperiodized them for you. Simple as that. And if I wanted to get rid of them, yeah, let's kind of delete that period. Yeah, let's get rid of it. Let's get rid of that one. Okay. And say save. Okay. So now when I come back to this list, okay, here, let's remember this. The build to 3rd of the 1st, refresh the list, and hopefully it's got fiscal year 2 on it now, period 1, because obviously that period is part of fiscal year 2 now, not period 1, and it was fiscal year 1 period 13. If it ever happens to you, then you'll know how important that is. Okay, that you can actually do that easily, yeah, without any major hassle, because for a lot of systems it's a major hassle to add periods or change periods right now. So I've changed these back because I want to show you that you can also have a period can be a day long. Yeah, you could have 1,000 periods in a fiscal year if you wanted to. Okay, so if I wanted to change this period end here, okay, to let's say halfway through January, okay, 15th of January. Well, I don't like the 15th. Pick the 5th. Well, I'm superstitious or anything. Okay, right. So now it goes from the 1st of December to the 15th of January. Automatically change that one to make sure that it fit. Okay, so the other complicated issue is that if you actually crossed periods, so if I actually ended this on the 2nd of February, let's say, it changes that one, but then it says, well, hang on a minute, we've got a problem here. Yeah, because you've got to change this one as well. Okay, so I'm going to have to change this, yeah, to something like the, I don't know, the 4th of February, and then let me get away with it. Okay, but it's nice in the fact that it stops you kind of creating periods that you can't duplicate periods or kind of miss bits out, and allows you to be totally flexible. Okay, so let me come out of there and because I don't want to do that. Okay, other routines in here are prior year adjustments. Okay, and what this effectively is just a journal. Okay, but it allows you to run your month end, run your year end, make all your postings, and then let's say your accountant gives you 3 or 4 months after a journal to do to correct the opening balances of your profit and loss codes or your balance sheet codes. And all it does is allow you to do it as a journal, and it just so let's kind of pick a particular code. If we pick this balance sheet code as an example and type an amount in. What it's say is the current brought forward balance was 0, but the brought forward balance for last fiscal year will be 100 now. Obviously, you've got to obviously balance the journal. Okay, what else have we got in accounting? Okay, we've got some reports, obviously. And we have dashboards, business intelligence. So we can see here sales accounts under budget this period and year to date. So obviously, if we're not selling as much as we budgeted, we want to know. Um, and we use the traffic light system to identify really badly under budget ones. Um, on the expense side, it's the opposite way around. We want to know if we're overspending. So we get a red traffic light if we've overspent our budget. So you can see we've got 105 there. You can also expand these out if you want to by clicking this plus button on the zoom and zoom them back again, print them, refresh them, whatever. So we can, so it's identifying to us underperforming, under budget sales, over budget expenses, and things like key performance indicators like what was our bank balance this period, last period in the variance, what's our creditors balance, what's our debtors, what's our stock valuation, what's our tax our tax liability. So essentially, that's the accounting. Accounting's fairly boring, I suppose, but what we've tried to do is solve a lot of the age-old issues around things like multi-currency stock revaluation and things that were always a pain for people. Thank you very much for listening. Okay, bye.